Hey guys, how are we today? So it has been a little while since my last video, but as you can see, the monthly candle has sold off underneath the 50% level. The weekly time frame has actually closed green on the BX Trender last week, and it is still showing green this week, even though it's only 8 hours into this week. But on the daily time frame, we are now at 1, 2, 3, 4, 5 days down in a downswing, and we have actually closed a day underneath the 50-day triangular moving average, the 50 TMA, and this diagonal trend line. You can see this is a fourth time diagonal breakdown, one of Michael's favorite signals. And you can see it actually looks like we are going to make a bearish retest from the underside. Now, being a daily time frame, I personally wouldn't consider this single wick enough of a retest. You know my strategy. I'm looking for 3 consecutive daily closes underneath the 50 TMA. Ideally, you get more than one failed move up, and on a wicking basis, or you get a daily swing into the underside that fails, which would set you up for a prime short on the swing break, which is another one of Michael's favorite strategies. And you will only know what I'm talking about if you've got the Gann swing indicator. So if you know me from anywhere other than TIA, just follow the 50 TMA strategy, I guess. If you're not paying for TIA, you're missing out on a wonderful trading tool. But what am I going to do on this daily time frame? Well, as you know, I am hedged, but based on this daily close under the 50 TMA, I am now looking towards potentially exiting my long hedge on any bounces from here, unless we see 3 consecutive daily closes above the 50-day TMA. Now, with this trend line here, I am going to be suspicious of just 1 or 2 daily closes above the 50 TMA, but underneath the trend line, because again, I am watching out for a pattern that looks somewhat like this to occur. And if you've watched my previous videos based on my weekly and monthly analysis from the past cycle, you know that I am potentially looking for either a a lunar style capitulation that leads into a grinding consolidation before another capitulation to find the final low, or we're already in this period and we're about to see our final FTX style capitulation that sets us up for the final low. Now, for the last few weeks, it did look like we were building a base, and we are potentially going to see a bottoming period for the market in which there's only one more major flush out. However, the big however is the S&P 500 has sold off underneath the 50-week TMA, as well as the market bias. And if you know the market bias from Traders Helping Traders, Peter DiCarlo over on X, the 50 TMA from Cowboy Trades, and obviously the Gann swing indicator from TIA Investor, you'll know that I put all 3 of these strategies together, and right now, it is not looking great. You can see, once we start to lose that market bias, if we get anything other than a very fast V-shaped recovery in the next 1 to 2 weeks, you can see here and here, in March 2023 and October 2023, if we get anything other than that, especially if we get a swing into the underside on this Gann swing indicator, then we are very likely setting up for a potential near 20% correction. So if we see another week down, or we see a few inside weeks, and then we see a failed swing that does not get above the top of this bar here, so the breakdown zone, if we do not reclaim 6,760 points roughly, then I think we are going to see the 6,000 to 6,200 region tested, which would line us up with these previous highs. Now, you can go have a look at Traders Helping Traders on YouTube, Peter DiCarlo on X, or Jason and Michael Pizzino on YouTube, or join us over in TIA, and you'll know why we're looking at these price levels. But I'm not going to repeat other people's analysis. You can go watch their channels. On the monthly time frame, you can see the BX Trender is probably going to close red. Now, when the BX Trender closes red on a monthly basis, it almost always leads to a double-digit sell-off. Almost always. And there's very, very few exceptions. Like, we had this one fake out in May of 2019, and we had this fake out in March, April of 2018. But other than that, almost every other time we've gotten a red monthly close on the BX Trender, you would have been doing so much better either shorting the market for the next few weeks or months, which I know Peter DiCarlo over in Traders Helping Traders does not like to do. But, you know, if you prefer to just sit out, that's another option as well. But just don't buy the dip. And that's something that Jason talks about so much in his channel. Once that trend starts turning down, stop buying the dip. At least wait for the S&P 500 to come back to fair value, this market bias you can see on the monthly time frame. At least wait for it to come back to fair value, because even if you have to hold it through for months in a loss, you're still getting a discount. It's far better than buying way up here at the peaks and having to hold it through, you know, a 50% drawdown and potentially years before you get back to a profit. So if you are going to buy the dip, please buy the dip at a fair value, or just wait for confirmation of a bottom. What am I going to do? Well, personally, as you know, I've been selling out and or shorting a lot of the tech stocks, and you can see Tesla looks like it's finally broken bullish structure, and it is probably going to close red on the monthly BX Trender this month. So as a result, I'll probably be removing my bullish thesis for Tesla. You can see Google is still doing alright, but Apple looks like it is going to flash a sell signal this month. I'm not going to go through all the stock charts, but I got very sidetracked there. But you can just see there's a strong downward pull on the market, and almost every bounce has been very short-lived. So I'm really of the belief that Bitcoin, maybe it can set up for another bounce. If you watched Michael Pizzino's video on YouTube today, you know that seasonally the stock market should probably have a bounce around now, and whether it comes in to a lower high, maybe, you know, 74k to set us up for a potential head and shoulders here. You can see the Gann swing indicator draws a very nice head and shoulders. Or even if we set us up for a lower high, you know, about 72k or something, that would be an absolutely wonderful short signal. So right now, just to recap on the video, I'm watching the daily time frame like a hawk, because I do believe the weekly and monthly time frames are of value, but I do want to get a bit of an early lead on the market. And I'm watching for 3 consecutive daily closes, either above or below the 50-day TMA. I'm on the lookout for a head and shoulders pattern. I'm going to be unloading my long hedge and potentially stacking up on a short position based on the weakness of the stock market. But weakness alone is not enough for me to enter a large position or trade. To close my long and double down on my short, I am going to need a mechanical trigger, and using swing breaks or the 50 TMA, that is going to be my mechanical trigger. Now I'm just going to finish up on the 4-hour time frame. You can clearly see the trends have turned back down since we broke down underneath 71k and failed to get back above it on multiple 4-hour swings. The swing table is down on the 1 bar, 2 bar, and 3 bar time frames. Currently, it is still looking like a potential Wyckoff accumulation schematic. However, The big, however, if we start to get lower highs under 69k on the 4-hour 1 bar, that's a first early warning sign. I find it has around a 70% success rate of marking distribution. But to confirm distribution, I would really want to see this low here at just under $66,000 get broken, and I'd love to see a 4-hour 1 bar swing underneath that. Your absolute confirmation of distribution is a 4-hour 1 bar lower high or swing top underneath around $63,000. I think that would be the nail in the coffin. And obviously, if you watched Michael's video, to cement this right here, the current low at around 67.3k, as a higher low and increase the chances of reaccumulation, I would want to see higher lows on the 4-hour 1 bar chart above around 71.5. I know Michael's looking for around 71k as an early lead, and that's where the market bias is, but I think 71.5 is probably a safer place. That's pretty much it for today. Thank you all for watching, and please like, comment, and subscribe, and make sure you keep your eye on that 4-hour and daily time frame, because I do believe a major low is brewing in the market. Peace out.